You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back once again, holding court with another double header coming at you here for OBC. Just taking hold of Education Wednesday. We love Education Wednesday here on the network. Don't tell my other shows, but it's one of my favorite days of the week out there, especially when we get to do a double header for all you pro folks out there listening live. Get to enjoy it all instantly in your ears out here. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-exciting network upon which so many of you are binging these days. We love you all. Hopefully you love us in return. If you do like what you hear, throw some stars our way. I know we've been doing this for a long time. We have a lot of reviews, and people know us by now, but it's clear the algorithms, the search engines favor new reviews, and it does help new people continue to discover the content. Just like this week, we got a 5-star review from Rich Eden. He's a man of few words. He just says 5 stars and thanks. Well, you're welcome, Rich. And everyone else who takes the time out there to rate and review. Could be in your favorite podcast platform. Could be where you get our mobile app. Could be YouTube. You throw some comments or likes, whatever you like to do out there. It all helps new people continue to discover the content at the end of the day. Of course, if you want more content in your lives, you want to join us live for today's doubleheader. You wanted to join us yesterday for yesterday's great Pro Q&A. You wanted to win the Pro Trading Crate for the month of May that we just gave away last Friday here on the network. Then there's only one place to go, theoptionsinsider.com/pro. 200 plus hours of content already waiting for you there. The second you hit the join button there, you're already off to the races with freaking ton of content and more coming every week out there. So stay tuned for all that fun. Theoptionsinsider.com/pro is the place to go. As we now go to see who's joining me on the old program, I am pleased to be joined once again by the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call Mr. P, welcome back to the show, sir.
Well, hello, Marcus. How are you? Glad to be here. This is going to be a great show. I'm excited.
I am excited as well. So let's commence operations, a little bit of basic training.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? Yes, sir. You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Yes, sir. Pull in, prepare to learn. Yes, sir.
All right, everybody. That music means it's time once again for Dan and I to put our drill instructor hats on, step onto the proving ground, grab our whistles, and walk you through some basic training, of course, where we explain some basic options concept or technique or strategy or indeed product like today and explain how you could utilize it in your portfolios. And let's start with a little basic word association, Dan. When I say to you the phrase binary options, what immediately leaps to mind to you, sir?
You want me to be honest?
Yes, I want you to be completely honest. I know what leaps to mind for me, and it's shady as hell.
Yeah, that was literally the exact word that I was thinking of.
Yeah, binaries, let's say, don't have the best reputation out there, listeners. It's an intriguing space. So when we're walking you through binaries today, just bear that in mind. This is a dubious area. This was inspired by a question we received recently. I forgot which episode it was, or I would credit the person who sent it in. But we started talking about binaries a little bit on a recent episode, and it seemed like a good topic to spend a full episode on. And you're right, Dan. The binaries are pretty much a dubious place for the options space out there. Most of the binary options players out there, I'm just going to say it, listeners, are just outright shady. You should probably avoid them. A lot of this business has been driven overseas by the U.S. regulators. So if you go online, you search for binary options right now, you're going to find a lot of overseas players that are not regulated in the U.S. You should avoid all of them like the plague. In fact, for the few legitimate operators in this space, and we're going to get to those in a second, they've had a hard time promoting their business because major platforms like Google and YouTube won't even allow you to buy ads anymore for search terms like binary options, Dan. That's how bad it's gotten. You can't go out and buy an ad that says binary options. Isn't that crazy?
No, not really.
I remember one of the guys we're going to talk about here, one of the firms we're going to talk about today, Nadex. They're a legit registered, regulated. They had a hard time promoting themselves because they got lumped in with all the shady operators out there, and they literally couldn't buy ads on Google. So yeah, that's how shady this realm is, listeners. So right off the bat, most of you should avoid it. It's a very dubious spot. That said, there are a few legitimate actors in this space, and those are the ones we're going to talk about. First off, before we even get to those players, let's talk about what the hell are they? Dan, if I said to you, what the heck is a binary option, sir? What are they to you?
Well, it's basically a bet on whether one thing happens or this other thing happens. It's, binary, meaning, one of two things, right? And so, yes, that's what they are in a nutshell. And they created this instrument. They call them binary options, but in a lot of ways, they're not like options. And I think we're going to get into that in a minute. But in a nutshell, that's what they are. They're sort of a bet on, is it this thing or is it this other thing?
Yeah, for the lifespan of this show, now over a decade, and of course, even on Dan's book, we've talked about things like the Greeks and all these other ways to evaluate the risk and the profile overall of your options positions. Throw most of that out when we're talking about binaries. These are usually very short-term, essentially, as Dan said, yes or no events. So really all you're looking at, you're forgetting about Vega, you're forgetting about time decay, all these things that you might normally focus on with a traditional options position, because you don't really have time for most of those things to play out. In a usual options position, you might have time for Vega to kick in. You might have time for time decay to take effect. You might have time for skew to kick in, all these other impacts. With a binary, you don't really have that. What will typically happen is you will have a strike set for you in a certain underline, XYZ, for example. The XYZ is hovering around 100. They might set the XYZ strike at 100, and your binary is, will XYZ close above 100 by this time frame? Could be a couple of minutes, could be a few days, weeks, whatever the case may be. And the answer is just yes or no. And that's really all you're focusing on. So now I mentioned there are a couple of legitimate players in this space, so we'll focus on them now and how they construct their binaries. Let's start with the one I really encountered first, and again was the first really legitimate regulated binary player in the U.S. They, back in the day, when we first launched our futures options content, it was called the Futures Options Roundtable. It was in partnership with this firm, Nadex. They've since gone through a couple of iterations, couple of takeovers. They were acquired by IG, which is then now part of Crypto.com, and then now it's all lumped in with Tasty Trade. So it's a whole big thing going on over there. So it's interesting, but they were the first really regulated official binary exchange. They existed. They had an office. You could go see them. They were here in Chicago. They weren't some fly-by-night shady operation. They were trying to bring legitimacy to the binary space, as Herculean of a task as that might be. And they approached it in an intriguing way, which is still my preferred way to price a binary, Dan. They offered contracts as short as 5 minutes, which, as crazy as it sounds, that's what they were up to. So again, no time for Vega, no time for none of that. Is just going to happen, yes or no, pretty much it. And they actually went out as long as 1 week. So they got a little bit more duration there as well. But most of their action is going to be in the sub 1 day department. And they offered them on a bunch of different products out there. You could trade them on 11 FX pairs. So not just Euro USD, but all of the major FX pairs. If you're an FX head, that was an interesting option for you, pun intended. Also 6 equity indexes. They didn't have the licenses to S&P 500, so they called it the US 500. Wall Street 30, that was effectively the Dow. US Tech 100, that was the NASDAQ. Small Cap 2000, obviously the Russell. China 50, so that's their Asian index. And they have a Japan 225, that's effectively their Nikkei. So they had those on the equity front. They also had binaries on commodities. You can do gold and silver, and then crude oil, aka WTI, the US contract, and nat gas. So they had a lot of different offerings. Of course, they got lumped in recently in some of their acquisitions with Crypto.com. Crypto.com also offers something they call up-down contracts on Bitcoin and ETH. They're a little bit different, and they're offered at a different platform, so we're not going to focus as much on them right now. But their structure at Nadex for their binaries is, to me, deeply intuitive, and I liked it. It was effectively, you have an event. These products are priced essentially from $0 to $100. And if an event had what you thought was a 50% probability of happening, let's say XYZ has a 50% probability in your mind and in the market's mind of expiring above a strike by a certain time, guess what that binary is going to be trading at? $50. It's $1 essentially to 100. So it's pretty easy. It was very intuitive for people to wrap their heads around this. And if you thought, let's say in our example, let's look at going out to crude oil, WTI. It's trading at $74. If you think there's, let's say, a 40% probability of that coming to pass, it's going to be trading $40. It's very straightforward. Market might be 35, 45, something like that, maybe even tighter out there. So you have a pretty good intuitive sense of what the price should be based on the probability. And that's really all you're focusing on with binaries. What is the probability of XYZ event happening? And that translates directly into the options price. There's none of the other things we're always talking about. Time value, vol, all these other things, throw them out the window. It is exclusively focused on what is the probability of X event happening by Y time. So in our example, these are priced from 0 to 100. So let's say the bet is if WTI is going to expire above $75 by the end of the day. You think it's going to happen. Right now, it's trading around 40%. So you think that's a pretty good bet. You're going to pay $40 for that contract. If it happens, if it comes to pass, at the end of the day, that contract's going to expire at $100. So you collected $60. You paid $40 for it. It went out worth $100. You net collected $60. If it doesn't happen by the end of the day, then you lose your $40 that you paid for this contract. It's very straightforward. And it's all, by the way, debits and credits. These are all cash settled. There's no depositing of a future or an underlying in your account. You don't have to worry about anything like that. It's all very straightforward, debits and credits. Dan, what are your thoughts on that approach to binaries, the pricing them effectively 0 to 100? Do you have any thoughts on the contracts they have over there at Nadex?
Yeah, I mean, it is kind of nice that it makes it pretty palatable. I mean, it basically comes down to the percentage likelihood you think the thing is likely to have, right? And I think a lot of traders, a lot of people with critical minds or a background in statistics or game theory, that kind of thing, tend to think in percentages like that. And so I think for a lot of people, it just comes super, super natural. And, that's great because things like regular options, traditional options have a lot more complexity to them.
Yeah, I've always thought these were great starter products for people who maybe are intrigued by things like commodities or FX, but they don't really want to dive into the deep end of opening a futures account and trading the futures or the options on the futures. For a lot of people, that's still a bit of a bridge too far, and I get that. So this was a great way to really dip your toes in those markets with something that was regulated, that you understood pretty intuitively. And it was a very simple yes, no. I liked that. Again, we have no relationship going with Nadex right now. This is not an endorsement for them. I just like their products. I like the way they're constructed. And if you are going to play in this space that is riddled with scammers, you should focus on a regulated entity, and Nadex is one of the few. Now, some caveats with binaries. We said before, this is a 0 or 100 yes or no contract. So what sometimes happens and gums up the works with binaries is at the end of the day, when you're approaching expiration, let's say you're getting down to the final few minutes and you're hovering right around the strike. In this case, we're talking about WTI settling above the 75 strike. Let's say it's hovering at 74.99 with 2 minutes to go. That contract's going to be trading close to zero, maybe $1. Might have a little bit of value in it, but effectively it's going to be zero. And then let's say it ticks up really quickly in a minute to 75.01. Now it's trading 100. So you can see there's a lot of potential price volatility right at the very end of that contract's life. It's going 0 and 100, 0 and 100, back and forth if it's hovering right at the strike. And that could be a little confusing for people. It could be potential opportunity too. You could buy something for $1 that's worth 100 a second or two later. Vice versa, you can buy something for 100. I wouldn't recommend doing that, 99, and then it could be worth pretty much nothing a second or two later. So the one thing that gives people caution and with these products, in addition to the bad reputation, is just the extreme, let's call it dubiousness, for lack of a better term, of the whole settlement and just expiration procedure. You probably want to close out your positions within the last few minutes before settlement. You don't want to be around for that vacillating 0 to 100. Now, that said, if your contract's deeply in the money, then it's not going to change. It's going to be trading around 99. It's going to stay there, right? But if you're hovering near the strike, you probably want to close things out before things get too wild. Now let's flip the script. Before we do that, let's go out to our live. Our live's already chatting about binaries. They have thoughts about binaries, as they are wont to do here, Dan. Let's go out to Age first. He says, "I am sorry, but I will always associate binary options with spam DMs. I used to get so many." Yeah, I understand that. That is what many people think of. That Dan and I, our first word association with binaries is scam, shady, spammers. Pick your S pejorative of choice. But there are a lot of them. Nichols says he actually did a little years ago. I'm guessing he meant when Nadex had a show with Options Insider. Haven't though traded them anytime recently. So yeah, he dabbled with them. Options Queen, I hear you. She feels the same way. So Dan, even a lot of our pro members still maybe rightfully skeptical about binaries. What do you think, sir?
Yeah. I mean, a lot of those organizations are out of Cyprus, which, hey man, I don't want to disparage any country. Are
you slamming all the Cypriots in our audience, sir?
No. I love Cypriots, but they definitely have a shady reputation, but that's part of what Mark and I try to do, is to bring to you things that have, some merit and some integrity. And, so yeah, don't answer the ones in your spam folder.
No. I'll never forget the Nadex guys telling me they had to go out to a conference for binaries, and it was on Cyprus. And I was like, really? You're going to Cyprus for a conference? But that's where you have to go for those events. There weren't really many others. Couldn't do them in the U.S. So, Dan, let's maybe shift gears away from maybe entities you're not familiar with. Have you heard of an exchange called CME, sir?
It sounds vaguely familiar. Yeah.
I was on them for a long time because I thought the binary approach was a great way, as I mentioned, to get people started in things like futures and futures options that can otherwise be intimidating. So this kind of yes, no, small dollar, simple binary probability type contract is a great starter product for people who maybe want to try WTI and all these other things. And, CME hemmed and hawed, binaries are shady, all the same things you said. Well, lo and behold, what did CME launch last year, Dan? But their own binary contracts. Now, they don't call them binaries. They're steadfastly avoiding that term. They call them event contracts. Dan, Are you familiar with these? Have you seen this launch from CME? I think it was around Q3, Q4 last year.
Honestly, I have heard about it, but I haven't really looked into them. I haven't traded them. But yeah, I mean, I'm superficially familiar with it. Yeah.
All right. If you want to deep dive into these, listeners, I just did one last week on or 2 weeks ago, I think now, on this Week in Futures options program. So if you're not subscribed to the full network, first off, what are you doing? You're missing all this fun stuff. And B, we brought on our buddy Nick, who runs Quick Strike. All the analytics we get on that show comes from his platform. And we did a deep dive for the whole hour into the binaries, the event. He loves them. He thinks they're really intriguing. So they're very interesting. Obviously, CME, you don't have to worry about the regulatory side. You don't have to worry about them going the way of the dodo. CME probably going to be around to handle the other side of your trade. So that's a nice thing. If you're worried about the shady nature of the binary space, doing them with an exchange like CME, you can at least cross that concern off your list. Now, unfortunately, I still don't know why. I haven't gotten a good answer from CME as to why they went this route. And Nick on the show with me, he expressed the same reservation. They didn't use one of the best selling points of binaries, which is their simplicity. They didn't price them $1 to 100 to go along with the probability. I guess they thought 100 was too rich for people. I don't know why they did it, but instead, Dan, they went with the $0 to $20 pricing structure. So if you want to back it into a probability, you have to multiply by 5. So it's just one additional step, kind of stupid. Let's say, for example, you have a binary out there. It's trading at $5. Let's make it even easier for you. Let's go $10, right? $10, it's halfway to 20. Multiply by 5. It has a 50% probability. In the case of the $5, it would be a 25% probability. So it's just that extra counterintuitive step. I don't really like it, but Dan, that's the way they went. What are your thoughts on that pricing nomenclature versus the more, I think, simple way that Nadex does it?
It's a little weird, especially because I don't know. I mean, what is the underlying? It's crypto, right?
Well, I'm glad you asked. CME actually offers 11 different underlyings, which ignore their website. Their website, if you type in CME and event contracts, it will take you to a page that says they have 10. But they actually have 11. I probably should let them know that their website is wrong. So they offer it on Bitcoin, as you mentioned, Dan. Also, the S&P 500, they can call it that because they actually have the license. The NASDAQ, the Russell 2000, and the Dow. So you get all your major equity indices in there. Also, in FX, they have Euro USD. So just the biggest currency pair. Then for metals, they go a little bit deeper. They have gold, silver, and copper. So if you want to get base, you can do that. And then in energy, they have WTI and nat gas. So Dan, how does that float your boat for underlying choice?
Yeah, see, I mean, to me, what's weird is to have it a $20 contract, very, very small contract. They're creating these contracts for, like small players, for retail players. And it seems like, I don't know, maybe they're just trying to, maybe they're smart about it. Maybe they're trying to attract small retail players with this very simple thing, so that they can further educate them and escalate them up the product ladder. Because, another thing, I'll segue just a minute, because I didn't want to forget saying this one thing, is that binary options don't really have that much of an economic purpose. Like with an option, like a real option, you can buy a put on whatever Disney, and if Disney's stock goes down, every dollar it goes down, the put goes up by the amount of the delta. And, if it's expiration, it's 100 deltas. So it's like a 1-to-1 hedge. Doesn't matter if Disney falls $1 or $50. But with binary options, it's a big difference. If Disney goes down $1 versus $50, you make the same on the hedge, but you lose but you lose massively different on the stock. So I don't know. I think it's interesting that CME did this, and I wonder what their motivation is.
I think you were right. I think they definitely are trying to cater more to retail. That's been, a big outreach for them for years. And interesting you mentioned the kind of economic use case, because you're right, in most scenarios, binaries are just purely speculative. I will mention one thing. I remember years ago talking with the Nadex guys, and they pointed out some interesting correlations they used to see around, let's say, OPEC meeting days and crop report days. Things when big traders in the traditional, let's say, corn options or WTI options would have big positions on. Maybe they were short tons of vol or short tons of strangles, and let's say WTI heading into a big OPEC announcement. They would see a lot of business on their platform, people effectively buying the wings of that to hedge it, because all you cared about was the movement immediately post that event. So all you cared about was a binary for a couple of hours or even a couple of minutes. So they would see a lot of people coming in to buy yes and no, buy effectively both sides, and then allow themselves to hedge themselves, whatever their other position was in the actual options. And they could do it very cheaply in the binary. So I thought that was kind of an interesting approach. It was all you cared about. All the risk was based around those few minutes, right? So if you could have a binary to hedge you in those moments, then it did work. That was one spillover I saw that was kind of intriguing. But outside of that, you're right. There really isn't a lot of economic utility. It's really just going to Vegas, just on a different type of underlying. But we mentioned the specifics. Let's get into some examples here of what CME has to offer. Let's say you're looking at your favorite, WTI. You have a contract that says, is WTI going to close above 70 by the end of the day? Right now, you're hovering close to 70, so it's trading around a 50 probability, which in our weird CME math backs into a $10 contract price, right? So it's trading for $10. If it goes out above 70 by the end of the day, remember, these go from 0 to 20. So it will go out worth $20. You've doubled your money. You've netted $10 for every contract you did. If it goes the other way, goes below $70, you will lose that $10. And that's it. Again, these are cash settled. There's no futures changing hand. You don't have to worry about any sort of delivery. It's all cash settled, which again is for your convenience out there. In fact, let's go a little bit deeper. Dan mentioned Bitcoin. I pulled up some examples here right before showtime. Coming into right now, they had a binary listed. And again, one of the problems with binaries is they list strikes kind of at the beginning of the session. And sometimes by the end of the session, these strikes could be wildly out of range. Like when we came in to start the show, Bitcoin was trading at 26,480, the CME Bitcoin future. It was down 785 handles, nearly 3%. The binary strike they had listed on CME was 25,500. So nearly 1,000 handles in the money. So the wager is Bitcoin going to expire at this time? They had 2 hours left to go. Is it going to expire above 25.5? The answer was pretty close to 100% yes, right? So it was trading at effectively its max value of 1975. So if you wanted to buy this, you'd pay 1975 for it. It would go out, if you're right, at $20. So you make a quarter. The downside, if you wanted to take a huge flyer on Bitcoin falling out of bed before the end of the day, you could pay a quarter for that. And that could go out at $20 if it happens. But again, it's not very likely. They also had WTI trading right before showtime. WTI was at about 72.5 right at the start of the show. And that ironically was their strike for the WTI contracts. That gets back to what we were talking about before, that weird getting into expiration when you're hovering right at the strike issue with binaries. That exists on the CME contracts as well. Right at the time when I pulled this up, this had 44 minutes remaining. And this contract was still hovering right around 50-50. So again, it was hovering right at the strike. So the yes was trading for $11.50. It was slightly biased towards the yes because it was 4 cents in the money, 72.54. The no was $9.50. So you're going to see that start widening out as you get closer. In fact, if I go pull it up right now, I'm sure it will be even crazier because we're getting closer to expiration. So Dan, maybe I'll do that. I'll look that up really quickly while you give us your final thoughts on binaries, sir.
Yeah, I mean, they're interesting because you can kind of bet on these unique situations. Like there's another site out there, predictit.org, which I'm familiar with. I've never actually done anything on it, but you can basically bet on political outcomes, like who the nominees are. And to me, like that almost makes a little bit more sense because, that is a binary event and it is just kind of gambling. The only way, in order to make some sort of economic purpose out of these binary options, you can kind of ladder them by doing them at different strikes so that, and change the volumes and that kind of thing so that, like the example I gave before, the lower a stock goes, the more you make because it'll hit another strike, that kind of thing. But it just ends up being a very, very complicated way to do something, to solve a problem that already has a solution, which is just regular options.
All right, I looked at it while you were talking, Dan, and it says here on the CME website that this contract will light sweet crude oil close above 72.5. The website has it listed as it settled out at 72.5, it says. So in which case, I guess both sides lost? I don't know. That's kind of, I'll have to look and dig into the contract specs and see exactly how far away from the strike you have to be for it to consider to be at or above. Because if it was at 72.54, I would assume that would be higher, right? So it looks like maybe both sides lost in that scenario. Again, caveat emptor with these products here, listeners. I'll have to dig in to see exactly what the nuances are. Maybe if it's within a dime of the strike, it counts as at. I'll have to go look and see what the specifics are here for CME. But that's intriguing in and of itself. Again, so let's overview here, listeners. Binaries, very dubious, very shady. A lot of people associate them with shady business, and hey, they're not wrong. A few entities that I'm familiar with, that we've worked with, that we know are regulated entities. Nadex is one of them. They list a lot of binaries. They have other things, knockouts and things. You can check it all out for yourselves, but let's focus on the binaries for this specific episode. Priced very intuitively, 0 to 100. A downside, you have to open a separate Nadex account. That could be a deal breaker for someone. You can't really trade them through your existing brokerage account. At least that wasn't the case. Now that they've gone through all their various mergers and iterations with IG, maybe that's changing now, so I'll have to go check and see. But it used to be a barrier. You had to go open a separate Nadex account, which is a bit of a pain. But the pricing, 0 to 100, very intuitive. Be wary. We just saw an example. Be wary on expiration. These things get kind of wonky, so you probably want to take them off before these last few minutes, because as crazy as things are with 0 DTE towards the end of the day, binaries are kind of 211 from that perspective. Now, if you're familiar with 0 DTE and you're comfortable with short duration, binaries are not that far removed from them, so you could be a little bit more comfortable with them. But again, they're very much strictly yes or no events out there. I'm looking at it now, the Dow Jones CME contract. It's trading, Dow Jones trading 33,704. That contract just hit 33,700. The contract's trading literally $10 each, listeners. So, and it has an hour 21 remaining. So these things get kind of crazy towards the end of the session. CME contracts a little bit different, priced 0 to 20. You have to multiply by 5 to back them into a probability. But at the end of the day, that's really all you're trading, is a probability of will this event happen by a certain amount of time. And usually that's a very short duration. Could be as short as a few minutes, could be as long as a week, but most of them are going to be, in the case of CME, by the end of the day. Binaries and long-term don't really go hand in hand. All right, Mr. Dan, if folks have questions, they want to hit you up over there in the land of MTM, where should they go? What should they do?
Well, make your way on over to markettaker.com, and I would love to hear from you. I'd love to help any way I can, and that's what we do.
Check them out, markettaker.com. Got the big retreat coming up. I won't be able to attend myself, unfortunately, but I will be participating via video, so stay tuned for that. A little treat for all your MTM crazies over there, Mr. P.
Yes. I think people are really going to like that, Mark. I appreciate it in advance.
And speaking of our crazies, we have our own crazies hanging out in our pro chat. We love you all out there. Stay tuned for all you fun folks out there, because we'll be back instantaneously in your ear holes with another whole episode of Options Bootcamp. For the rest of you on-demand listeners, check it out next week. Same bat time, same bat channel. Wherever you get this fine program should be coming at you there. Stay safe out there, listeners. We'll see you back here next week, another episode of Options Bootcamp.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.